Good evening, everyone. This is Rodney with the Triton Wave Market Outlook for Thursday, January 3rd, 2013. Well, I hope you had a wonderful New Year, and I hope you made some money on Friday and Monday and today, last day of the year and the first day of the new year. And I hope you didn't get caught short too much. But let me just review here. Um, this move on September 6th was happened because Ben Bernanke infused $42 billion into the system. This move happened when Mario Draghi infused money into the ECU. Okay, this move happened after this decline, this major head, which I have nicknamed the Ben Draghi bubble, and then it went down to 1341. This move happened when Bernanke decided to infuse another $42 billion into the economy on top of what he did in September. So that makes 90 billion a year and almost 90 billion a month, and almost a trillion a year. That brought us up to this point up here at 1441. We came back down here at end of year tax loss selling, and then Congress decided at the last minute to not go over the cliff. But fundamentally, what exactly does that do? They did not address spending. That's going to be over the next 2 months, and over the next 2 months, they have about till the 1st of March. So over the next 8 weeks, we're going to see a battle go on in Congress about what to spend, the debt ceiling, and really, regardless of whose program is highlighted, whose program gets the political edge, or who actually wins. The GAO said that it was a lousy deal. What Congress passed, what the Senate and the House passed, was a lousy deal, and they did not address spending, as I just mentioned. So that's going to be a huge fight. Now, when everybody wakes up and finds out that this, let me see, 1383, this 75 point move in the S&Ps was just short covering and not a rally into the stratosphere, they're going to realize that we are in big trouble. And no matter whether Boehner rules or Reid rules or Obama rules, no matter whose program gets in, by the year 2020, our debt will reach $20 trillion. That is not a good setup for, and Bernanke is already buying 50% of all the debt that's out there. This is not a good sign for the economy. And if with everything that's happening, we are still at 9%, 8.9% unemployment, and the housing market is just barely growing. We could be at 1.8% growth next year. So that's all the fundamental news. So now we're looking at the waves to confirm all the fundamental news. First of all, hang on, I got a call. All right, so if we look at the waves, this move on wave 5, which is a very powerful wave because it's the largest one. It will set the trend in motion for a very long time. That already is, let's see, that calibrates at 61.5 on the right hand side here. You can see the number on the light blue wave at the peak or near the peak in October. We came down and we're back up. We're almost right at that peak again. We could open up 10 points tomorrow, but the point in fact is that T4, even with this move up, is uh, let me see, the longer wave is below zero. All of T3 is below zero, all of T2 is below zero, and half of T1. And the major wave of 5 is just barely, what do we say, it was 61 and a half. It's a third of that, 20, it's 19, less than a third. This does not bode well. These waves, you can see all the way back. They tell you what's going to happen a long time in advance. So if you are long, congratulations. If you were short, I'm sorry, but all you have to do is wait a few more days. This gap has to fill. My line in the sand is still 1421. It closed at 1420 on Monday, and it was up obviously like 37 handles. But all gaps get filled, and when they get filled, these waves will be back below zero. So just watch out. The last time, every time there's a Fed meeting, it seems that the markets react favorably for 2 days, kind of just like this, and then they start crashing. So I think this is ephemeral, short-lived, and we're going to come back down again. Okay, I also wanted to show you a very curious chart. This is the euro versus the dollar, Forex. And this is nice wave not nice wave patterns, but closing prices just up and down, like 50% retracements and another 50% retracement and then down to the low. And then you come to December 31st. And this is what I haven't seen a pattern like this for, let me see, from 4 o'clock in the afternoon for the next 24 hours. This is what the euro did in this pattern. And if you swing out a little bit and look at it, last time I saw a chart pattern like this, I'll tell you a funny story. I was 18 years old and I was working with schizophrenics. I was running a research project in schizophrenics at a state mental hospital in Massachusetts, and I was in charge of tracking their electroencephalogram and their EKG and their EEG, and this is what their EEG typically looked like when they were listening to loud noises. It looked exactly like this chart. So we're not dealing with something normal here. This is the last time I saw a graph like that. We're not dealing with something normal here. We're dealing with something that's running completely scared. Okay, so it took off when the deal was made, like a jackrabbit, and then about 10 o'clock this morning, it caved in. So we're back to where we were. At least this is a nice even pattern and not like totally schizophrenic like this one. So when the schizophrenia wears off and we're back to normal patterns, we could see this take a nosedive. Now, if we look at the daily, it's a complete reversal. All right, so that's the euro USD. All right, let's move that other way. Excuse me. And let's look and see if you were following if you're following the 1597 tick chart over the last 2 days of 2 trading days of Monday. All right, say you were following T3. T3 got you in at 1396. This is for day traders. Got you in at 1396 and out just after the opening bell at 1447, and it got you back in again at 1450 for a ride into the close. So these waves are telling you when to get in and when to get out. Let me see if the 21 works on this. Well, the 21's more broad spectrum. It's not really a day trading vehicle, but T2 did get you in on this when it started to go above zero. T went above zero here, went above zero. T2 confirmed, T3 confirmed even more at 1413, and a ride right into 1457. So even if you were, let's go back to 1597, and if you're following the ABC waves, the C wave gets you in here, gets you out here, or even better here, the B wave. At the beginning of the day, gets you in. Gets you out if you were in on Friday, and back in right here at 14:45, and a ride into the close. And now they're starting to dip back over. So whether you have the ABC waves or following my Triton waves, there's still incredible opportunities for this. All right, I'm going to highlight one stock each night instead of going through a whole bunch of them, because I want to show you what an analysis does if you choose to have me use the Triton Wave Consulting using the Triton waves to analyze a stock for you. So on the daily Bank of America here, let's just stretch this out. We're going to highlight Bank of America and just see how far back we can go with this. Now, if you were in, this is let's stretch this out. Now, this doesn't look like much going up and down, and you can barely see the waves because there was so much activity going on around let me see here. Okay, there was a lot of activity going on in 2008. So let's skip forward to this. Let's skip forward to 220.09, when the A wave, not the A wave, I'm sorry, when T1 goes above zero, followed by T2, T3, T4, and T5. So once this goes above zero, you just track it and track it and track it and track it, and it goes right up to 377. So this is one of these things you can get in and walk away from. This is now 3909. March of '09. When it starts up, it confirms a few days later, and then the end of March, the beginning of April, and down here at the middle of May. And it goes right up to 377. So basically, it gets you in about 435, and you ride it up to 17. You can just basically walk away from this once all these lines are confirmed and T5 is above zero. Nice little pattern. You've owned it for from February 22nd until your target area, either this target or this target, either one, till, I'm sorry, wait a minute, let's go back here. February of '09 to April of '10. So you had it for over a year, and you made yourself, that was $19. The beginning, you got it in at $4 when no one wanted it. Okay, so the same thing goes, we have to stretch this out to see these waves here because the other ones are kind of dominating the time frame. Okay, so stretch this out. T2 on 311 it's already been rejected from the 377, which is it's an exponential moving average that I like, and it's at 14. It gets rejected down to, and this is also 311 until 1011. So this is a 7-month play. And if you wanted to short it or just get out of it, if you shorted it, you went from 14 to 6 to 6.6. Okay, then you got back in here at 6 on 1011, and you made it all the way up to the 377 again at 9. So these are like 6 8 months play. The most recent one is the move that happened, the down move that happened in May of this year. Well, last year now. May 2012 at 8:15, and you didn't really make anything there. But you would have made on the next move when you got in August of 2012 at 8:07, and according to all the waves, you are still in it. So that's just an idea. You can actually do also the 21. So you can also use the 21 to play with. Now, on going back to the beginning of December here on T1, you don't really want to play this on the short side. You want to use it. You want to use it to cover, because the anchor chart, or the anchor wave T5, is still above zero. Is way above zero. So you would cover here and wait for this move, and then when this starts turning up, or does turn up, then you get in on the long side to go with the anchor of T5, and you ride this up. You go since T5 is up, you don't play any of the downside ones. So you're out here, you're in here, you're out here, and then you're in here. And these are all, I mean, we can go back and look at this here. We'll change this to a daily. And you can see all these moves are happening only in this space of time right here at the end of the chart. So if you're just playing the long one, you want to walk away, then you pick one of these spots to get in, and then you just ride it up until this wave moves over. So that's what I have today. This is highlighting one stock that might be in your portfolio. If you are interested in having me do more, I'll show you in a minute. So there's two ways to participate in this. One is to get yourself some ABC waves that are on the Trade the Market website, and here is the URL for it. You can't copy it, so you just have to write it down, or you can call Trade the Markets at 512-266-8659. The waves are available for TradeStation, eSignal, Sierra Charts, and NinjaTrader. And if you want to contact me personally, I'm at tritonwaveguy@gmail.com, or you can follow me on LinkedIn, Rodney Julian on LinkedIn, or Twitter at RodJulian. All right, I wanted to show you something else, or you can participate like that. I now have a Triton Wave consulting service that I started at the end of last year, which was like last week, and it's a concierge type service that's tailored to your individual needs. So if you want me to do analysis on a particular stock, I will do that tailored to your needs using the Triton waves, not the ABC waves. The ABC waves are for you to play with during the daytime and to follow me along in the nightly videos. The Triton waves are an advanced version of the ABC waves, and they are not for sale. It is a proprietary proprietary indicator that I use. Okay, my proprietary indicator, but I will definitely I use them to analyze portfolios or individual stocks. Again, the ABC waves, if you want to use those, were highlighted in John Carter's book, Mastering the Trade. The charge, I'm going to leave this up here for you just to look at. I'm not going to go over it again. I've been over it a number of times. But if you want to read this, just put it on pause and read it. And the only thing that's changed is the $99 offer. that I had up there until December 31st. I decided it was way too short a notice for the end of the year, and everybody had lots of things to do. So this offer is actually good until January 31st, 2013. And this is the disclaimer that I have to put up for the government. And I wish you all very good trading and have a great year. This should be a fantastic, fantastic trading year. And I will see you at the next update.